There are a lot of people already inside our webinar sessions. Without wasting your time, we are going to start our webinar now. So good day, everyone, and welcome to our webinar on the risk management and trading strategy with technical analysis hosted by Pew Prime. So my name is Davison, and I will be your presenter today's sessions. So in today's webinar, we will dive into world of technical analysis, which is one of the most important tools used by traders and investors to make them more informed decisions when it comes to buying and selling financial instruments. I think a lot of you guys has been experienced that you are going to trade with certain products and you are not sure where do you need to put the resistance level, the support level, where do you need to put your take profit level or your stop loss level. Today's sessions, we are going to cover it. Or even sometimes you are already difficult to try to understand whether this currency or this investment is going to rebound or not. So after today's webinar sessions, you guys are going to learn more about the candlestick patterns. I hope it can help you to better your trading strategies in future. So today we are going to mostly cover about the technical analysis instead of the fundamental analysis. So in technical analysis, right, it's just something like we are trying to look at the historical price movement and try to predict the future movement of the market. So without using the fundamental thing, which is the storyline, we only look at the chart. We only look at the previous price, try to understand the movement for certain currency, and then we try to focus that is it going to increase further, or you will likely to retrace in future. So this is by using the technical analysis, this is the thing that we are trying to figure it out. So the difference between the technical analysis and then the fundamental analysis is the things that the difference is fundamental is most like the storyline. So investor traders need trying to understand what's going on into the market now. Example, previously we can see that the Russian-Ukraine thing, try to understand the storyline and link into the market. So by using the technical analysis, we need to combine with the fundamental analysis. So after you fully understand all those storyline in the market, the fundamental analysis in the market, then you try to link with technical analysis by trying to know which price is the best for you to do your trades, to buy or to sell. And after you buy and sell, what price is good for you to take profit by using the technical analysis. This is the usage for the technical analysis. Thank you, everyone. I saw a lot of love over the chat box here. So yeah, this is the first topic, technical analysis, that we are going to cover now. And then the first thing we need to know is the support and resistance thing. So as you guys know, support and resistance is just some line that you can draw it and then try to determine whether the price will reach until where. So okay, let's talk about the support level. So in case if you guys are interested to certain products, certain investments, certain currency pair, you want me to draw all those support resistance level in here, I will also you can also leave in the chat box over there. So I will try to draw for you. I will try to choose certain products and draw for you and try to guide you. How can we understand about the resistance and then the support level? Okay, so the first thing is we are going to look at how can we draw the support level. So easy way to understand the support level is the price is the lower price that has been reached a lot of times before. For example, you can see that you can focus for this is the gold chart. You can see overall long-term trend for the gold is still downwards trend line, right? Downward trading, right? So we can see that. And then after it touched the lowest level around 1620, it started to rebound. This is the first time it rebound. And then the second time, you can see that it touched again 1620 around these regions, and it tried to rebound again. Okay, and then the third time, it tried again 1620 again, touching this lowest level, and then it's trying to rebound. So this can be considered as a support level because, as you can see, every time these products touching certain price, they try to rebound. So support level is actually the lower price that sustains the selling price that protects the currency or the assets to. It can prevent them to dropping further. You can see that after it reaching certain support level, the buying momentum for the currency, for the products, for the asset classes is very huge. So you can see that this is a strong support level over here previously. After it touching, it always rebound. Okay, this is some ideas of the support level. And then we are going to focus on the resistance level. This is also the I will also explain it as a gold chart lah. So we can see that resistance level is certain price after investor buy, and then they think that this is the maximum price, then they take profits over that higher price, and then causing the price to drop. So the easy way to understand is resistance level is the high price that unable to keep increasing more in future. There will be certain selling pressure after it reach a certain price. So we can see that previously, you can see overall trend for the gold is still dropping. And after that, it tried to rebound back. It rebound back, and then we can see that after it rebound, the maximum price, the gold rebound is 1625 around here. So after you can see that after it rebound, it tests again this price, it failed to increase further, it dropped back. So this is what we call resistance level. You can see that there is a selling momentum after it touching this 1725. So this is what we call the resistance level, a price that the maximum price that it reached before it drop back or before it retrace in future. So this is the previous chart. Let's look at the current movement for the gold. I will also draw it for you. Let's see. As you can see, that's the movement for the gold, the overall trend, right? For now, right? You can see the overall trend for gold keep dropping now. So it's obvious after it dropping, it rebound on certain price. You can see that it try to rebound from 1805. This is when we consider this might be a support level. So we can, if we can compare it back to the previous charts, you can see that previously the overall trend for gold still same, downward trends keep dropping, and you can see that same thing after it reached 1805, this level, it tried to rebound back. You can see that this is the first time, and then the second time is also here. You can see that after it retraced back, testing again, it failed to break below, and then it tried to rebound back slightly. So, and obviously, after it breaks this support level below, the price will drop further. This is a trading strategy for you guys. Sometimes after certain products, it breaks below the support level, the price could be expected to drop a lot in future. But I can see it's quite obvious. Previously, after it touching 1805, rebound, touching again, rebound. So now we can assume, according to the previous trends, we can assume that the gold price, after it touching the 1805, this level, is begin to rebound back in future. So this can consider a very strong support level. So we can assume a lot of people is going to try to buy when a gold price reach 1805. So now you know this is the support level, the price that a lot of buyers will try to prevent it to drop further. And now we are going to focus on the resistance level. So the resistance level, we are going to look, you can see that overall trends. We can look at the maximum price previously. The gold has been touched in before that. So we can see that try to understand. Okay, 1870, this region can consider as a very, very strong resistance level. I saw a lot of people ask for the NDB bonus. This is the things that depends on luck. I answer the NDB questions first because I think a lot of people are spamming about the non-deposit bonus thing. So you need to chill, yeah. You need to relax first because this is a thing that is mostly depends on the chart. So yeah, it mostly depends on the luck, your luck. So our company will likely to choose 50 people who join the webinar are entitled for the 50 non-deposit bonus. But these are things that it depends on the luck. So nothing we can do. Even you spam a lot of here, we also not going to like choose it because it's like randomized choose the people who entitled for the non-deposit bonus. So yeah, so even you spend a lot of chart over here, still, yeah, it still depends on your luck as well. So the most important things for today is like technical analysis. So yeah, if you guys have any question regarding those technical analysis thing, charting, or if I'm too fast, you can let me know. So yeah, try to calm down the chat. So I hope I clarified about the non-deposit bonus for you guys. So we come back to the webinar today. So you can see that now we focus on the resistance level. The resistance level is the maximum price that have been reached in future. It's not a maximum price. I can consider a higher price that have been touching a lot of time before. So you can see the gold 1870. This region, you can see that a lot of time the gold price touching this resistance level, it tried to retrace back, and then it touch again 1870. He tried to retrace back, and then this is the third time 1870. You can see. So he tried to break out, he tried to increase further, break out the resistance level, it still failed. So now we can consider 1870 can consider a very, very strong resistance level, because if we are going to focus on the previous chart, you can see a lot of seller trying to prevent the gold price go above 1870. So easier to understand is a lot of investors will try to sell after the gold reaching 1870, the crucial resistance level. Yeah, I will slow down, sorry. So you can see that now 1870 can consider a strong resistance level. So after the gold price rebound, you can expect in short term or even long term, there will be a chance for gold to reach until 1870, which is another resistance level in future. So after it successfully break out again, then we can consider there will be a chance for gold to appreciate further. This is a long-term chart for the daily analysis. So to clarify it, to make you guys more understand, support level is the price below the current price, and then we need to look previously, see whether what is the lowest price, what is the price that will suddenly rebound after it touching it. So we can see that 1805 strong support level. It tried to rebound it after it touching it. So touch again, this time touch again, strong support level. So now we can assume if it failed to break out below this support level, there will be a chance that for the gold price to rebound, because this can consider a strong support level. But you need to understand that after it successfully break out below, then there will be a chance for the products to drop a lot in future. Yeah, this is the gold chart just for your information. So in resistance level, you can look at the maximum price that have been keep touching before. So this is the first time, second, third. So 1875 here or here is a very strong resistance level. So after it reached the resistance level, a lot of sellers are trying to sell it. So this is the price that a lot of investors will be focused on. So just for clarification, why do we need to understand support and resistance level? It's because if we are going to trade products such as maybe gold price, such as crude oil, or maybe such as cryptocurrency, we are very difficult to understand what is the intrinsic value for the products. So if you ask everyone, what do you think about the gold price? Everyone will have a different answer. So they are very difficult to have like stock compared to stock market, we still can value it, like look at the company intrinsic value, look at whether the company is going to gain a lot or not. But compared to gold price, it's all mostly like human subjective. They're trying to predict. Everyone have different perspective on the gold price. So we need technical analysis things to trying to understand what is the global investor thinking, what is the best price for the gold to sell, what is the best price for gold to buy. So from the charts over here, you can see that a lot of people, sorry if I'm too fast, I can see that I will try to slow down a bit, of course. I can see that a lot of people previously, we need to understand what the global investor is thinking, right? Because everyone have their own prices for the gold. But if you're going to look at the technical chart, you can see that a lot of people trying to buy the gold after it reached certain support level, especially at 1625 around here. So after it rebound back, it reached again, you can see a lot of strong buying power over here. So from this chart, or after it reached 1625, a lot of strong people, strong institutional investor is going to go in and buying the price. So you cannot understand resistance support level as just a line. You need to understand as a human psychology behavior. This is the thinking of the global investor, global institutional investor on how are they going to predict, how are they going to think that what is the value of certain prices such as the gold, what is the value of that. So it's quite obvious. And you can see after it touching previously, so after they buy gold, then the gold price go up. Then after it touching certain level, they were trying to sell it. So we are also very difficult on to predicting what is the selling price, what price is the best for us to sell the gold. So same thing, we need to refer back to the previous chart and look at it. So you can see that previously, after the price reaching 1870 here, a lot of people are trying to sell it again. So now, this you can consider already, after the gold price reached again the 1870 at this region, we could expect certain investors to sell, because if you are going to look at the previous charts, you can see that from the global investor side, 1870 can consider a very good selling point around here. So this is why we need to understand about the technical analysis. But of course, everyone have their own style to drawing technical analysis. But how to draw it? Support resistance level is just you just put a line that have keep touching before that, like this. You put at the line that the price keep touching it before. So you can see downward trend, touching, rebound, touch again, rebound. So again, you can see that it dropped back and then that it rebound. After it rebound, right, it touched again here. So you can see that this price 1805, just one price, it already touched 1, 2, 3, 4, 5, 5 times. So this is considered a very, very strong support and strong support level for all of you guys. Same with the resistance level. So you can see this is the first resistance level. Let's look at the second resistance level. You might consider 1945 as another strong resistance level. As you can see, a lot of institutional investors sell the gold after reaching the maximum price around here, which is 1945 around here. So this can consider another resistance level for all of you. Okay, so this is, I hope I clarified it for how we draw the support and resistance level and what is the philosophy. Why do we need to understand these things? Because we are unable to predict the intrinsic value of gold, for example. So we need to understand what is the global investor thinking, what is the institutional investor thinking, what is their perspective on the gold price. From that perspective, we try to draw the line to predict which price is best to enter. So yeah. And then on drawing support and resistance level, right, I think there will be a lot of people suggest H1 or maybe even 30-minute chart. But just for my own opinions, I think H4 and daily or even weekly, the longer candlestick you'd see, the longer time frame you put your resistance and support level, it might be better. It might be better for us to focus on, because mostly if we are going to focus on even 5-minute or 30-minute charts, it will have a lot of different issue happens, like some unpredictable issue that will happen. For example, suddenly a lot of people want to go UK to travel. They convert a lot of pound sterling. If you are just going to use the 30-minute charts or even 5-minute charts, you can see that the movement will be huge. This is the things that you are not able to predict. Suddenly, a lot of people want to go UK, travel, the price move up. If you are just using the 5-minute charts, it's very difficult for you, because for us, impossible to predict this kind of small things, like how many people is going UK to travel every day. So better we focus on the longer term charts, which is like H4, daily, or even weekly. This is the time frame that will mostly affected by the global geopolitical issue, global fundamental issue. So this is the thing that we can focus on. Okay, so this is just my opinions on how can we put the time frame when we are drawing the support and the resistance level. So now you guys have a brief understanding what is the support, what is the resistance level, and then you guys also can also have a brief understanding about how should we put the H1, H4, even daily charts for you to trade. So just clarifications, daily or H4 might be mostly affected by the geopolitical issue, which will be, we can take those informations, get those information from news. But if you just use as a 5-minute chart, a lot of unpredictable things will happen. So you are very, very difficult for you to draw all those support and resistance level. Okay, so it's a brief understanding for what is support and what is the resistance level. And then now you guys understand what is support and resistance. I'm going to teach you another things, another indicator for those who are not willing to draw support and resistance thing. Because if you just use the Fibonacci thing, Fibonacci retracement, this indicator, it will come out everything with support and resistance level. So you can see that this is an example. So for today, I will also teach you how can we use the Fibonacci retracement, which is built by these people named Fibonacci. He used those mathematics formula to predict what is the support and resistance level in the market now. So let's take some example. Before we start, just give you guys a brief understanding about how we draw the resistance and how we draw the Fibonacci retracement thing. So very important, you need to look at the charts. If you are going to draw the retracement, Fibonacci retracement thing, you need to draw from the lower line over here, the lower point. You need to scroll up to the higher point, but they will be things that you need to make sure there will be like 25 to 30% of retracement over here. Don't worry, you just look at this, but later I will show you how can we draw it in MT4. So this is clarification. You need to draw from the lower to above, but in order for Fibonacci retracement to more efficient, we need to have 30% or 25% retracement. You need to draw from A to B, but you need to make sure that there will be a retracement over here. So this is an example. You click the Fibonacci retracement thing, you draw from the bottom line, you draw to the maximum line. You can see that why can we draw this is because there is a criteria. The criteria is we need to have 25 to 30% of retracement. If you see this kind of chart, overall trend is upwards, and then like 25, 30% of retracement, you can draw it with Fibonacci retracement. So after you draw it, right, all those resistance and support level will come out. So now I'm going to show you the real example. Before we show you the real example, this is the uptrend first, and I'm going to show you some downtrend. Downtrend is the same. You draw from the higher level, point A, higher level, you draw to the bottom level. Same criteria, we must have 25 to 30% of small retracement. So you draw from higher level, click and pull until the lowest level. All those resistance support level will come out automatically. And then in order for you to have to draw the Fibonacci retracement thing, you need to make sure there will be like 25 to 30% of the retracement. This is the upward trend. You draw from lower to highest, okay? And then this is a downward trend. You draw from the higher to lower. So I will show you the example. So now maybe we can look at the oil chart. You can see that this is a very clean oil chart without any support and resistance thing, without any trend line thing. So now I'm going to teach you about how can we draw the Fibonacci thing. So for your information, Fibonacci is at here. You can click here. You can see the F, and then 4 straight line over here. You click here, draw Fibonacci retracement. You use your mouse to click, left click your mouse, you click it, and then you draw and scroll until the bottom, until here. I would suggest that you pull until the body of the candlestick. Body means if you are going to focus inside. So let's look at the body. The body means, right, this is the body. Like you can see, this is a square, and there will be a 2 black line over here, right? Black line. This is what we call shadow in more professional terms. So this is what we call shadow, and then this is the rectangle over here. So body means that we draw until the rectangle level over here instead of we follow until the shadow below. Okay, so I think it might be better because shadow can consider a fake prices or fake breakout prices. So but the body of the candlestick can consider a more legit price level for everyone. So better you draw until the body means that the square over here, this level you can stay instead of this all long shadow below. You draw at the below there. So lower price around here. So let's look at the bigger chart. Yeah. So after we use, remember the criteria for us to draw Fibonacci retracement, especially for downward trend, the criteria is overall is downward trend, but there will be more than 25 to 30% of the retracement. Okay, so you draw from the highest level around here. I draw again for you in case you forgot. Draw the highest level around here. Remember, touching the body instead of the shadow. You just draw until below here. You can see all the support resistance level will automatically come out. This is all not the price that I draw. And you can see, look at the chart. You can see that it's quite nice because it's quite legit and correct. Also, you can see that overall trend for crude oil explains certain trend over here. So overall trend for crude oil, here is downward pressure. So you can see that after you keep dropping until it reached the Fibonacci support level around here, it starts to rebound back. So here also, it's dropping until it reaches the support level around here, it starts to rebound back. So this can consider a very good support level after you draw it out. So you don't have to draw it one by one, but you just, after you draw the line over here, you can see everything is shown already. This is a support level example. This is also another example. So after it dropping until this price, it starts to rebound back. And you can see after it break out below the support level, the price drop a lot. This is also another usage for us to do trade. When certain products break out below certain resistance and support level, we could expect that it will follow its trends aggressively. So after it break out here, you can see that this level, after it break out below, it dropped a lot. After it dropped a lot, and then you can see that it tried to rebound back after it reached these prices also. So this is the importance of the Fibonacci thing. So it's quite precise also. So this is how we draw Fibonacci thing. Okay. So I think you guys understand about it, right? So I think we're going to talk about next thing. Yeah. So I think everyone is good. So we are going to continue. So remember, just a very easy one. You need to draw from the highest level, draw until the bottom level. So after you draw it, all resistance support level will come out, and there will be a criteria. The criteria is we do need 25 to 30% of the retracement over here. So everything will come out nicely. So this is the example. Highest level draw until the lowest level. And then this is the lowest level draw until the highest level. Let's look at to see whether there is any example for AUD USD is also another good example. You can see that overall trend for AUD USD, this pair is upward, and then like more than 25 to 30% of the retracement. So same thing, you click here, you draw from the lower level, pull until the highest level. You see every price is quite nice. All the resistance support level is quite precise as well. You can see over here, this price, you try to break below, but it can't, showing that it's a very, very strong support level. Every time it touching the Fibonacci 50%, this region, rebound back. It touching, rebound back. So same thing. This is the resistance level. After it near the resistance level over here, it will drop back. So this is the Fibonacci retracement thing. Okay, so yeah, I think there are still few of them don't understand how to draw the Fibonacci thing. Never mind, I will try to explain it in simple terms. So very easy. For Fibonacci retracement, especially for upward trend, you could just click here, the Fibonacci retracement over here. You draw from the lowest level, you pull until the highest level over here. You can see that. So there will be a criteria over there. We need to make sure there is a 25 to 30% of retracement. Retracement means the overall trend is bullish, right? And then it drop back 25 to 30%. This is what we call retracement, drop back from the overall trend for the long-term trend. So after you draw it, lowest level, put to the highest level. You can put here easier. So all those resistance support level will come out. Okay, and then this is the upward trend, and this is the downward trend for you to draw it. So for those who are not sure how to draw, how can we use the Fibonacci retracement? Is simple understanding is after you draw the Fibonacci retracement, you will get all those support and resistance level. You can try to figure it out whether this price is going to drop after it reaches the resistance level. Because for example, if you are going to do trade now, according to Fibonacci retracement, I will try to let you guys understand if we are going to do trade now, especially for crude oil, how can we do the trades by using the Fibonacci thing? You can pull those resistance support level from here. Okay, you can see now, right? The overall trend for crude oil, it tried to drop already, and then you can see it successfully break up below the previous support level, which is indicated by the Fibonacci retracement 76.70 here. This price, it dropped back. So maybe if this candlestick opens below this support level, it would suggest that the crude oil is already successfully break up below. There will be a chance the oil price might extend its losses until where we could expect another support level, maybe reach until 75.35. But there is a certain criteria we need to measure. Sometimes, of course, this is not 100%. Sometimes you still need to be careful. Maybe you can consider a sell order, but you can put a stop loss because after this candlestick break above back 76.75 around here, you can expect that the chart might be rebound back. So this can help you to better your trade because you can put your stop loss level above the resistance level if you want to do some sell order. And then if you think it's very successfully break up below, because according to Fibonacci retracement chart, you can see that according to this chart, then we could expect there will be a chance for crude oil to drop further. If this candlestick opens, if the latest candlestick, this candlestick close below the support level around 76.70 according to Fibonacci. So if you do sell order, of course, you are not just think, oh, I sell until no tomorrow, right? So you need to understand what price you might consider to take profit. So after you put some sell order, maybe you can find for another support level for you to put take profit thing. So maybe you can consider 75.35, this Fibonacci support level. We can see that a lot of time it touch before it rebound, touch before it rebound. So you need to more be careful lah if you do sell order, because you could expect if after it drop until this support level, there will be a chance for it to rebound. So this is the thing that how we use the Fibonacci things for you to trade, because after the resistance support level come out, you can try to figure out your trading strategy. But of course, need to bear in mind, technical analysis is technical analysis. Sometimes fundamental things will be stronger. So even all those technical analysis indicator, all those support resistance where you draw it beautifully, all those indicators is indicating that there will be high chance for the products to drop. But sometimes suddenly a fundamental issue, suddenly a geopolitical issue happens in the market. No matter how strong is your technical analysis, you might experience some stop losses. So it's very important for everyone. By using the technical analysis, even though all those indicators is very nice, you still need to understand what is the good price for you to put your stop loss. So for example, you sell now, the good price for you to put your stop loss is you need to put above the resistance level around here, because there will be a risk. If it rebound back and even above the resistance level, this can consider a fake breakout. Okay, so this is the thing for you guys to understand. And then next, move on. So you guys have a brief understanding about what is the Fibonacci thing. And then let's move on. Try to remember there is a criteria of the Fibonacci. You must have a 30% or 25% of retracement. This is a very important thing, because I show you example. If this chart, this trend overall is bullish, right? Overall is keep increasing, right? But there will be no retracement. So when there is no retracement, we are not able to draw the Fibonacci thing. It's not efficient for us to draw the Fibonacci retracement thing, because there is no retracement. This is the criteria when this guy calculating all those formula for the Fibonacci retracement. Okay, so yeah, this is the important criteria. But if overall trend is bullish, and then how can we draw it? How can we draw the Fibonacci? How can we draw the support and resistance? We can use another indicator, which is what we call Fibonacci expansions, which we will explain it more in next webinar in future. So this is the thing that we are going to cover it more. But for now, so you guys learn about the Fibonacci retracement thing. Yeah, this is the wrong thing. You cannot draw it. If overall is bullish but no retracement, you cannot use the Fibonacci retracement thing. The criteria is you need to have around more than 25% of the retracement. So after we know the support, resistance level, and then we know how to draw some using some indicators such as Fibonacci retracements to draw all those support and resistance charts. So we are going to move on to more detailed thing, which can combine your support and resistance level and combine it with your trading style, which is what we call candlestick. Candlestick is very important. You need to try to understand what is the candlestick, what is the philosophy behind the candlestick, and then how can we use it to combine with all those support and resistance level and enhance your trading strategy. So everything can combine. It doesn't mean you just learn candlestick and then you ignore all those support and resistance level. You need to bear in mind all those technical analysis, support, resistance, candlestick pattern, trend line, everything you can combine all together. The more you know, the better you combine. Your trading strategy might be better as well. So try to understand candlestick patterns. You can try to combine with support and resistance thing. So yeah, today the candlestick pattern that we are going to cover is the first thing, hammer and hangman, bullish and bearish engulfing. I will show it all those examples later. Don't worry. And the morning star and evening star. Even though you guys don't memorize all those names, but the important thing is you need to memorize the pattern, the candlestick pattern. When you see the candlestick like this, how are you going to trade? This is the most important thing. The name, I can say that it's not quite important for everyone to memorize it. So you try to understand the pattern. When this pattern form, what will be the impact? What's the order you are going to do? So this is all three candlestick pattern that we are going to cover today. Okay, so let's move on. First thing, hammer and hangman. So by looking at the pictures around here, you guys can have a brief understanding what is this already. So you can see that what is hammer. Hammer, you can see that the candlestick is like the hammer. And then you see the body around here, the body. This is what I call the body, the rectangle or the square over here. This is what we call the candlestick body. And then the straight line, the black straight line over here, this is what we call shadow. So hammer form when the body is above the shadow. Normally you can see the candlestick will be like this. This shadow, there will be shadow in up there, and there will be a shadow. There will be a shadow in down there. So this is things that when no shadow in up there, no shadow over here, only in down there, down stage, you can see the shadow over here. So this is what we call the hammer. This is like the catch for the hammer. So when hammer form, it shows that a lot of investor is trying to buy the products after they reach it, because this is the fake breakout price. A lot of investors trying to push and buying the price until it reach the highest level, which close above the level here. So after you see the hammer candlestick, we can suggest that there will be a chance for the products for your investment to rebound in future. This is what I call hammer. So you need to understand rectangle over here, and then you have a long body or long shadow over here. This is what I call hammer. Hanging man is same with hammer. It's just different thing, different trend. From downward trend to upward trend, we call hammer. From upward trend to downward trend, we call hanging man. So this is an example for hammer. Overall trends is downward trend. Try to combine with all the resistance and support level, and then you can see after it reach certain support level around here, it try to rebound back. So this is what you can see that after it formed the hammer candlestick over here, it try to rebound back. So this is the thing that you need to bear in mind. Don't worry, I will also show you the live example now. Let's look at previous charts. Can you find any hammer? Let's look at it first, yeah. So yeah, all right, I actually found a hammer over here, but it's not very nice. But this is a good example for hammer for oil. You can see that same thing. This is oil chart. You can see especially this candlestick. Let me zoom. Okay, you can look at this candlestick. Do you see that the body is over here, is very short, but the shadow over here, sorry, the body is very short, but the shadow below the body is very long. This is what we call hammer, right? As we showed just now, hammer. So after it form, this is the candlestick over here. So after it form, right, the oil price start to rebound back. Okay, so this is an example. And then, of course, you can try to combine with the support level. Previously, you can see that previously oil price keep dropping and touching these prices around 73.50. This percent is rebound, and then touch again, rebound, touch again, rebound. Yes, as we mentioned earlier, the price keep touching below is what we call the support level, right? So after it touching, it rebound. So you know the support level over here, but you're not sure what is the good price for you to enter, whether this price is good to enter or this price. So you're not sure. So you need to patiently wait until certain candlestick form. Especially you can see a beautiful candlestick, beautiful hammer candlestick form over here. After it form, you can see a lot of investors trying to buy it, and then the overall price increased a lot. This is an example, the real life example for the usage of the hammer. But of course, this candlestick is not like keep happening. You need to see it yourself. You need to try to understand it yourself. But try to combine everything and combine all those support level, combine some of the fundamental news and link to the market and link to your trading strategy. Okay, so this is the candlestick. And then this is what we call the hammer. And then let's move on to understand engulfing, bullish and bearish engulfing, which will be easier for everyone to know, because everyone to understand, because it's simple. For bullish engulfing, the buying candlestick is much bigger than the selling candlestick. You can see that this B, which is the buying, bigger than the selling. When this thing happens, especially for the downward trend, when this thing happens, we could expect there will be a trend reversal for everyone. So it's very good. And this bullish and bearish engulfing is quite It's always happen in the market. So this is the thing that you need to be careful. So bearish engulfing, same thing, but just difference. You can see that the selling candlestick is much bigger compared to the buying candlestick. Yeah, this is the thing there, and this is the example for you guys. So you can see that overall trend is downward trend, but you can see after the candlestick beautifully formed, a bullish engulfing, the buying candlestick is bigger than the selling candlestick, which is in the red color. This is the buying candlestick, and the red color one is the selling candlestick. You can see the green color one, which is what we call the buying candlestick, is bigger than the selling overall trend. We could expect there will be a trend reversal. So maybe you can consider a very good buy order after reaching this kind of candlestick. And then this is the bearish engulfing. So selling candlestick much bigger than the buying. The red color candlestick bigger compared to the the green color candlestick. So this is a thing that you need to bear in mind. Let's move on to the real life example. Can you find any bullish or bearish engulfing candlestick? So okay, I think we found a very beautiful bearish engulfing. Now do you notice it? As we can see this candlestick, and I'm trying to combine the resistance level and the chart pattern for you guys. If you are going to focus on the previous chart, right, you can see that around this region, 1955, this region can consider very peak prices around here. You can see every time it touch here, it drop back. So this can consider a very strong resistance level. You can also draw around here, but I think it's not quite strong enough because when comparison 1955 here, it touched more compared to over here. So 1955 strong resistance level. And then now you can see that it touched again 1955, a strong resistance level. So 1955 is a strong resistance level. Imagine you do not see the chart patterns over here. You only see this, the bullish trend. And then 1955 is a very, very strong resistance level, right? So you need to try to understand. You need to wait until certain candlestick form. Especially you can see that if you notice this bearish engulfing candlestick is formed, maybe it's a very good start signal already. This is the real life example for you guys to notice it. So it's touching. So you can see that the selling candlestick much bigger than the buying candlestick. This is what I call the bearish engulfing. Selling pressure is very strong, especially it reached certain strong resistance level. The overall momentum drop back. First example. This is also another example. Second example. This is even stronger. You can see that selling candlestick so small. But the buying candlestick, the green color candlestick, is much bigger, much taller compared to here. So it's quite obvious. Try to combine, same thing, try to combine with all the support level over here. You can see that after this candlestick form, it try to rebound back. But of course, this is not 100% thing. There will be example like here, even this candlestick beautifully formed already, but it still drop back. So as I mentioned, you need those technical analysis is just something can enhance your trading strategy, but of course it's not 100%. You need trying to combine all those fundamental things and other things. Try to understand what's happening in the market now before you do some trade, because even though you are very strong as technical analysis, but sometimes some fundamental, some storyline things happens in the markets will affect your trading. So just a brief understanding for you guys. This is all those examples. You can see here, if you notice, it's another example. Here is also another example. There are tons of examples that you can look at the charts. So try to understand it, and maybe you can enhance your trading strategy in future. This is an example you can see, right? Strong resistance level touched a lot of time before, and then the selling candlestick bigger than the buying candlestick. After it touched, it dropped back. It's a good example also. But I still need to ask you guys to be careful. This is not 100% thing. You need to try to combine everything. You don't all in. After you don't put your money, everything, and then you bet on it. No, you need to have a good risk management. If you are going to do this kind of trade, you can put stop loss level above the resistance level. But you can compare your profit is of course much higher. If you imagine you do trade over here, you see this kind of candlestick pattern, your stop loss level maybe can put above the resistance level. But if you compare it, your selling pressure is much bigger, because you can see the support level is much far. If you do sell order, the support level is much far, means your take profit level will be much far compared to your stop loss level. So this is the thing that you need to bear in mind. Stop loss is important. Don't put all your money in and then bet against just one candlestick pattern. So just some disclaimer for you guys. So I hope you guys understand, this all the candlestick pattern, and you can enhance your trading strategy. So another thing, which is the last candlestick pattern that we are going to talk about it today, then we will move on to the Q&A sessions for 10 minutes. So first thing, morning star and evening star. You don't have to memorize everything. What is the morning star? What is the evening star? You just need to understand the pattern. You can realize that the star pattern, the morning star pattern, the evening star patterns, their patterns is like T. You can see there's a T, English T symbol here. So body is very, very small. This is what we call the body. The body is very, very small. And then the shadow is very, very long. So this is the T. So you can see that this whole candlestick here is mostly determined by the shadow. So things happens. This is also another signal for the trend reversal. You don't have to memorize morning star, evening star. Maybe you can just memorize as T. Just memorize anything you want to know. You want to memorize that, because this is a thing that can help you. The candlestick pattern is more important than just the name. So the T candlestick like this will be indicator for trend reversal. Let's look at some example, and we can find it. Yeah, for gold charts over here. Here we will also have another more evening star, which is the T symbol over here. The body is very, very small, and the shadow is long. You can realize that. I try to circle it because it's too small. Let me figure it out. No. So you try to understand. So this is the T over here. After it formed the evening star, it dropped back. Okay, so let's look for another example. This is one of the example. Of course, if you don't wait for the bearish engulfing, you can also just focus on the evening star over here. You can also enhance your trade as well. So let's look for another example. Of course, there will be another. Sometimes there will be bad example as well. So I show you bad example. Okay, so this is the proof that you cannot all in your capital to trade with certain things. So you can see that this is also a T, but the overall trend is still dropping. So no trend reversal, not able to do some buying trend over here. If you all in, then you might lose your capital. This is an example for evening star, but no trend. This is an example for morning star, but there is no trend reversal, but it followed their downward trend. So the reason behind it is maybe you can consider this area might not a very, very strong support level, but sometimes markets happens like this. So this is things that I want to warn you guys, because no 100% profit, no 100% probability that you are going to gain a lot in trading markets. So this so I show you all the example. Let me see. Yeah, this is also a very, very good example if you notice for the dollar index. A small T, a very, very small T over here. After this T is formed, the huge trend reversal happens. Do you notice it? I zoom in. Let's look at. Yeah, this is T. What we call the morning star. After it happens, all trends rebound. So next time you notice, it's better for you to combine with technical support and resistance level. It will be very beautiful if those candlestick pattern match with resistance and support level. So for example, let's look at the gold. Because I know a lot of people are trading gold, right? So let's look at the gold. So you can see the candlestick pattern is very beautifully formed, bearish engulfing, but it will be more beautiful if the bearish engulfing formed during the resistance level. It retraces back from the resistance level. So those combinations that can build your confidence for your trades. And then especially you can try to combine with all those fundamental things previously, because previously on fundamental side, there will be signal that the Federal Reserve is going to increase their interest rate aggressively. So this may cause the dollar go up, the gold price go down. This will be another topic that we are going to talk about in future also. So there will be a lot of things that you need to learn in future. If you want to become a good trader. Technical is just a small part. But of course, you need to understand what happens in the market. Try to link every strategy all together to enhance your strategy. Okay. So yeah, think I already explained everything for you guys.